Hi everyone, it's Jeff from the Systems Lab here. One of the things that I've noticed, and one of the more interesting sort of shifts in crypto over the last sort of few years, is that it seems like, especially Bitcoin, like it's getting less volatile than it used to be. Now, that doesn't mean that crypto is suddenly low risk or calm or anything like that. It's not. But compared with earlier cycles, the numbers do sort of suggest that the volatility has been compressing. So I actually went and pulled the numbers. This is a 30-day realized volatility that's been annualized. And the idea here is to sanity check whether this is a real trade, a real trend, or just a sort of like nice sounding idea. So here's the numbers. For Bitcoin, median 30-day volatility in 2017 is about 83%, right around here. In 2023, down here, we got down to about 42%, and then we kind of like jumped up a little bit, but then we're at about 40% still in 2025. So now versus that 2017 cycle, it's like a 50% decline. Now, Ethereum over here in blue is it's cooled off. You can see it's also kind of coming down, but it's been jumpier. It's not as clean. So we hit, let's ignore like the super crazy times, but even here, this is about 93% vol. And then we dropped down to about 46% in 2023, and then we're back up here to 69.2. I know this is hard to read. This is 69 in 2025. So it's down about 40. Um, I'm not sure what the percentage is on that actually. It's about 40%, is it? Um, so overall, though, it's that like the direction is generally down. It's just a bit bumpier. But to me, both of these are demonstrating what a maturing asset class looks like. As things mature, the vol comes down, there's more liquidity, and it kind of tends to keep things in track. We're getting that like more institutional participation with the all the ETFs, and that means that institutions are creating ETFs. It's often retail and institutions that are buying into those ETFs. We're also getting better sort of infrastructure, more derivatives, um, and of course, all those ETF flows. So, none of that removes the risk altogether, but it can change the character of the market. So, in other words, crypto still spikes pretty hard, but the baseline behavior may be becoming a bit less chaotic than it was earlier when it was sort of thinly traded in this area back here. So really, that's about it. The takeaway is um, Bitcoin may be maturing into a less sort of crazy and explosive sort of asset into something that is, a little bit more able to be held without the crazy amounts of volatility that we've experienced before. So yeah, that's really about it. Now, as always, we'll keep you posted when we see something coming up that we think is worth paying attention to. Um, but this is an interesting sort of development. So yeah, keep an eye on this for your portfolios. All right, guys, Jeff from the Systems Lab. I'll catch you in the next one.